I made $1,441.57 last year doing absolutely nothing. It was possible with smart investing and engineering my finances. And now I'm going to show you how you can also get started with investing, even if you're a total beginner. Before we dive in, remember, this is my personal experience and not professional advice. Don't come running to me if you lose any money. I ain't going to pay you. Oh, and if you don't believe me, I currently am invested in 9 different stocks, and that is the total amount that I've invested and the return that I have. If you go over to the charts, we can see that we're on a 1-year chart, and I started at 0 and throughout the year slowly have made returns. I believe the maximum was about 30 to 40% at one point. Currently we are sitting at a 13.89% return, which is £1,127.47, and that's actually dropped since I started recording this video, which will really suck for continuing. Don't know if I said that right. Look, I know what you're probably thinking. Look at how much you had to invest to make them returns. However, this is what real investing looks like. I'm sorry, I ain't here to sell anybody no dreams. I'm going to keep this video short and sweet with a more detailed follow-up for those who are interested. Before we get into the 2 strategies, first I need to share 4 investing rules that I developed for myself. This part of the video is not for the algorithm. Adding this is probably going to do more damage to this video and probably, do you know what? You better watch the whole thing. This is important. I'm only adding it because it's necessary. Rule 1, stash or surge. Investing is a key to growing your money. Essentially, you can surge your capital, whereas savings is like stashing your money away. But with investing, there is risk, so bear that in mind. Rule 2, fiscal focus. You have to define your financial goals so that can define your financial strategy. Remember, you may not see the returns that you are looking for if you don't select the right strategy, so make sure they align. Rule 3, risk awareness. You have to remember that all investments come with risks. Where there is possibility for gains, there is also possibilities for losses. It's all about keeping a balance and managing these risks. Rule 4, crucial diversification. Remember, diversifying your funds is how you manage and better spread your risk. Do not put your eggs all in one basket, as diversification is the key to long-term investing success. Now, how to get started. There's 2 steps. First is to download Trading 212, and the second is to choose the right strategy for you. So what is Trading 212? I'm sure you can tell from the name, but if you don't know, Trading 212 is an investing app, which I would personally recommend for beginners. It's a really well thought out app and makes it easier for new investors to get started easily. It's also where I built my custom trading pie, I'm not sure what it's called, but in Trading 212 you can create pies which essentially act like ETFs or exchange traded funds. So what that means is that you have a body which owns a bunch of little assets. So if you buy that body, you also buy them little assets. If you don't already have an account, use my link below to join and you will get a free share worth up to, I believe, $100. So what strategy did I use to make my money, and which strategy is right for you? I'm going to split this into 2 parts. First is going to be effortless earnings and then eager earnings. And eager earnings is more of an active approach when it comes to investing. So if you're interested in that, skip ahead. Effortless earnings will be more of a passive approach. Let's get straight into it. So what is effortless earnings? Well, it's already in the name, but I'm not going to bother telling you. I'm just going to show you. So after you have downloaded the application using my link, open it up, and then we're going to navigate to the search option right in the middle here. And then we're going to want to search for, Vanguard S&P 500 is one of the most owned stocks out there currently, so it'll be on the homepage. If not, just search for it, Vanguard S&P 500. Then we're going to want to place the buy order. Pick a number that you can commit to every month. Now you can see that is 1.4 shares. Review your order and send it off. I'm not going to do that now, but you get the gist. And then you're going to want to commit to this every month on the same date. Set a reminder here. That's literally it. You don't need to watch the rest of the video. Seriously, that's it. Oh, you can actually set up auto invest so that it buys it for you every single month. However, I will do an even better job of selling Trading 212 after they sponsor me. If you're wondering how this is going to make you millions, well, it uses a little power known as dollar cost averaging. It's ideal for beginners. And if you don't know, let's break it down. So what is dollar cost averaging? Well, I kind of already explained it. It's where you put a certain amount into a stock or ETF every month consistently for a long period of time. Why invest the same amount regardless of the market price? Why not just invest a little less if the market is a lot higher? Well, it's to avoid the stresses of perfectly timing the market, and trust me, it's very stressful and difficult to do that. How does this help? This bit I'm actually going to read off because there's a lot of maths in this and To be honest, it just further shows if an idiot like me can make money, so can you. Let's give an example. Say if the price is $10 of a particular stock. With $100, you can buy 10 shares, right? Say the next month, the price drops to $5. Now, with the same amount of money, $100, you can buy 20 shares. So currently, you have in your portfolio 30 shares. However, the average price of them 30 shares is $6.67. So in other sense, it averages out your total investment cost. Buying more shares when there's lower price and buying fewer shares when there is a higher price. I'm hoping you get the gist now. This method is perfect for beginners as it simplifies investing and promotes a steady portfolio growth. Remember, think of it as a marathon and not a sprint. This is for the long run. Before we get into eager earnings, it is important that you do your homework first. I'll link a bunch of resources down below. Also remember, it's all about your mindset. So you need to break them bad habits first. And if you haven't already seen it, I'll link my bad money habits video somewhere on the screen. And for those who are eager and want to take a more active approach when it comes to investing, let's check out my personal strategy. And eager earnings essentially consists of 4 key qualifiers that I used when it came to selecting the stocks for my portfolio. The first qualifier, wealth and wellness. Check out the company's financial health and stability. You want to check their annual reports and financial sites for key metrics such as profitability and cash flow. The second qualifier, management magic. You should focus on the leadership quality, as researching the CEO and having a good leadership team together most likely creates a better environment for the employees, which then leads to the success of the company. You should use platforms like the company's website or say LinkedIn or Glassdoor. The third qualifier, advantage arena. Understand the company's role within the industry that it's in. Understanding this can help you identify its possibilities for success later down the line and industry reports to gain this insight. The fourth qualifier, corporate crush. Do you like the company? It's as simple as that. And does the company's values align with your personal value? For example, right now, I don't think a lot of people will be investing in Starbucks. Just saying. Each of these aspects offer a comprehensive view of potential investments. For those who want a deeper dive into this process, I'll make a more detailed video if there's demand for it. So let me know in the comments. Regularly check your investments, ideally monthly, and mainly because this frequency allows you to keep up to date with your investments without you reacting to the daily fluctuation. Remember, it's long-term investing. The last step is to remember that investing is a continuous journey of learning. Stay curious and stay informed. I'll keep sharing my personal insights and strategies, and you do your bit. And also, remember, don't forget to change your money habits and your bad money habits. Go check out my video. Should be linked here, wherever. Anyways, I'm off.